What's going on, everybody? Welcome back to the Bandit FX Podcast. And today we're going to be covering the cryptocurrency space. Our special guest is Jake. He's a really good friend of mine. I've known him basically my whole life. So Jake, tell us a little bit about yourself and your background in investing and, how long you've been in the crypto market.
Yeah, what's going on, guys? I'm happy to be here. Thanks for having me on your podcast. I know this is kind of a new venture for you. I think it's the second episode. So super happy to be here and talk about crypto, which is something I'm really passionate about. So I've been into investing for about the past 4 to 5 years. I got into crypto right at the peak of 2017. It's almost like I got in, started making a bunch of money super fast, and then obviously got rug pulled and learned a really hard but really valuable lesson in investing pretty much right away. So I was really happy that I got in when I got in, and instead of taking the 2017 dump as a L, I kind of just used that as a learning experience, really dove deeper into investing, into how money works, how the system works, how everything plays into everything. And that only made me more passionate about crypto and saw more value in crypto. So for the past 3 to 4 years, I've been, diving into crypto, making some strategic investments, and that's what I'm here to talk about today.
Yeah, it's definitely important, as technology moves on, obviously, there's going to be different opportunities in different financial spaces, especially technology and blockchain and where everything's headed. This is something that a lot of people really aren't familiar with. And if you watched my previous podcast on gold and where I think it's headed, just a little recap, basically the rate of inflation for the US dollar has surpassed the growth rate of gold. So gold is really not the best option as far as protecting your money from inflation. You're still losing buying power with your money in precious metals such as gold. So Bitcoin is definitely one of the reasons that I do believe that gold is going to be heading down, and that's just because the older generation of people who are very hesitant with Bitcoin, once those generations get phased out and those people are no longer here, it's all that money's got to go somewhere. And with younger people and social media and how information spreads so fast now, I really do think that a lot of people, especially younger generations, are going to be choosing Bitcoin over gold as a store of value.
Yeah, for sure. I think everything's going digital, and I think as an investor, you really need to look towards the future of where things are going to be in 10 to 15 years, not where things are right now. So right now, the majority of the money in the world is being held by an older generation of people, by boomers and by people in their 40s or 50s or 60s. But what you have now, what you're seeing these young people growing up in this digital era, starting to make a lot of money, and naturally they're going to look for digital investments. So you're going to have a kid who grew up playing Fortnite, using V-Bucks, using digital currencies. They're already acclimated to using digital currencies and already see it as valuable. With money now, what are they going to do with their money? Are they going to put it in gold or silver or bonds? They're not going to do that because they don't relate to that. They relate to the digital landscape. They understand the digital landscape, and that's where the money is going to be heading, and it's already heading that direction with e-commerce, with YouTube, with all the media companies that are out there making a killing right now. Everything's digital, so it only makes sense that investments are going to go digital as well.
Yeah, definitely. Internet money is a huge thing now. Back in the day, probably 10, 15 years ago, it was really hard to make money on the internet if you could at all. So now the way everything's grown, especially with YouTube and other streaming platforms and things like that, these younger people are making money just doing the things that they love to do on the internet and getting paid for it. So the whole idea of digital currency is very, very familiar to a lot of these young investors. So, especially now, basically what happened with Wall Street bets and the whole stock market with GameStop, as soon as that happened, you have a ginormous percentage of people who are trying to get into investing now. Everybody wants to learn how to trade stocks. Everybody wants a piece of GameStop. Everybody wants Dogecoin, which is a cryptocurrency.
Yeah, I think people really woke up to the power of the younger generation, to the power of social media when it comes to investments. I think it really shook the industry because the kind of old guard, suits, as people like to call them, who have controlled the money markets for years and years and years and years, and they've been using it as their own playground that they control. I think they and a lot of other people have realized, like, wow, this younger generation has buying power now. They have influence now, and they can actually make an impact on markets. So I think we're seeing, and we're right in the middle of a major shift in the way investments work, and the way money works, and where that money is going to go.
Yeah, definitely. And if you think about it, even in other industries, such as the movie industry, Blockbuster either had they had two choices basically: either adapt with new technology and the new times, or basically get left behind. And what ended up happening is Netflix basically took over that entire industry that Blockbuster had monopolized. They were in control of the movie industry, and Netflix came out with new technology. Blockbuster didn't want to adapt, and they got phased out basically. So, there's a lot of people who are very skeptical of Bitcoin, and a couple of those reasons are that, there's no intrinsic value, it's not backed by anything, it's fake money, and, can't you just print more, or in this case, mine more Bitcoin? Like, can't you just keep making more Bitcoin? So
I talked to so many people about Bitcoin for the first time, and they don't understand that it's all coded, that it's all verified on the blockchain. It can't be changed. And just a very hard concept for people to understand, because they're used to dealing with banks and with the Federal Reserve, who can literally just type in an extra number on your bank account and make you have more money, or they can change interest rates artificially. They can control the entire money system as they see fit. With Bitcoin, you can't change it. It's dictated by code, it's written, and it cannot be changed at this point. And yes, there is the argument that you could make other cryptocurrencies, and I think that's a lot of when people say crypto's a scam, right? Because they got in 2017, it went up, and then the rug got pulled, and almost every single crypto lost nearly all of its value, besides a few really key projects. So I think just like any new industry, there's a gold rush. There's tons of people who are joining in, and they're trying to make as much money as they can as fast as possible, and they're not necessarily in it for the right reasons. So I think with the crypto industry, it's no different. I think you're going to have coins that come out that pump and dump. You're going to have coins that come out that rise to 500%, 1,000% gains, and then go back to zero. But the bottom line is that the industry as a whole is here to stay. And as an investor, it's your job and it's our job to figure out which projects are going to be in it for the long term, what has the most value long term. And I think that if you're able to find those projects in the crypto space, it's going to continue to be one of the most lucrative asset classes in the world.
Yeah, definitely. And, a lot of people seeing Bitcoin's price right now, it's $44,000. We peaked at 58K. A lot of people would just feel like it's too late, it's too high, it's too expensive.
There's no cap on it.
Well, we're still in price discovery. Like, you got to remember, so as far as stores of value, you have gold and Bitcoin are the two top stores of value other than real property. But in this case, gold has a market cap of 10 to 11 trillion dollars. The full Bitcoin market cap has only just broke 1 trillion this year. So all of that money is still locked up in gold. All of it. You got to think, Bitcoin is $55,000 and it only has 10% of the market cap of gold. And this is, as we're moving into the future, it's only going to be, more and more money coming out of gold from the, older generations, and it's going to be, getting pushed into Bitcoin. It's going to be getting pushed into other crypto projects, other new technologies that are coming out that are basically changing the way we do everything, in everyday life. It's not just, buy and hold gold, hold it forever, that's it, and it's the way that.
Yeah, and market cap is all relative too, right? So as they keep printing more money, as the world supply of money goes up and up and up and up, the benchmark for where the value of certain assets can go is basically limitless. So, more money is being printed. It's no secret, right? The US is printing more money. There's more euros being printed. Every country, every nation in the world is printing more money right now. And that's not necessarily a bad thing. Just you as an investor have to realize that money's got to go somewhere. If you're holding cash in your bank account right now, if you're holding $10,000 in your bank account, if you're holding $20,000 or $50,000, or maybe you're even just holding $5,000 in your bank account, the only thing that's guaranteed with that cash is that it's going to lose value over time, because they're going to continue printing more money. It's going to continue inflating, and it's a 100% fact that money is going to lose value over time. So as an investor, as somebody who's trying to protect your money and grow your money, you have to look for places to put that. And I think that Bitcoin is one of the most natural places as a store of value for the younger generation to put that money. And we're seeing it happen right now.
Yeah, and basically just to throw a statistical fact out there, the strongest fiat currency in the world is the euro. And since its creation, it is actually devalued over 95%. And I saw basically a very interesting quote the other day that basically said, if you gave me the option to hold any currency for 250 years, which one would it be? And the guy basically said Bitcoin, because Bitcoin may be worth more or worth absolutely nothing in 250 years. But fiat currencies are guaranteed to be worthless in 250 years. So you got it, like, there's a lesson in that. Like, it's not, you are guaranteed to lose money holding all of your buying power in fiat currency. You need to hedge against that with something that will either appreciate over time or hold its value over time and protect you against the inflation.
Yeah, and I think certain things are non-exclusive too. I think especially with social media, you have certain tribes that form, right? You have these tribes where it's like Bitcoin people don't like Ethereum people, or Bitcoin people don't like gold people, or gold people don't like Bitcoin people. And then you have the real estate people, and it's like, it's not non-exclusive, right? You can have 10% of your portfolio in Bitcoin. You could have 10% of your portfolio in gold. You could have 10% of your portfolio in real estate. So these assets are not exclusive. You can own numerous different types of assets, and I think everybody should own numerous types of assets. I'm very heavily exposed to crypto right now just because I think it has the most potential for return. I'm young. I'm willing to take more risk. If I lose all my money, guess what? I can make it back. I have a lot of time to do that. But I think if you're trying to take a more conservative approach, I think everybody should have 10% of their net worth in crypto. If you have $10,000 in your bank account right now, it's basically no risk to you to put $1,000 into Bitcoin, because guess what? If you happen to lose that $1,000, you still have $9,000 left. But if you keep that $10,000 in cash for the next 20 years and you just keep it sitting in your bank account, you're guaranteed to lose value on that money. So by not investing into assets, it doesn't have to be Bitcoin. That just happens to be what we're talking about today. But if you're not investing your cash into assets, you're guaranteed to lose. And I think people, once they start looking at it like that, even conservative investors, even people who just want to protect their money, are going to realize that holding fiat is not conservative. Holding fiat is dangerous because you're guaranteed to lose. Why would you hold something where you're guaranteed to lose? So I think a lot of people don't think about it like that. A lot of people don't really understand how much inflation really affects the value of their money, because it happens slowly over time, right? It's not something that you look in your bank account, or you go to buy milk or you go to buy gas and all of a sudden the price just skyrocketed. It happens very slowly over time. But the smartest investors, they keep their money into assets. You'll realize that most investors don't have a lot of cash at any given point in time. So when they say save your money, put your money in your piggy bank, save it up for a rainy day, really all you're doing is guaranteeing that money is going to be worth less.
Yeah, definitely. And one of the things that you see that, these governments and, fiat currencies are basically trying to combat crypto with is their own version of a digital currency. I'm sure you guys have heard something basically along the lines of a digital dollar coming out. The federal government is trying to figure out a way to phase out paper money. And why is that? The entire world is moving digital. Everything's moving digital. So why shouldn't money be digital? So basically, they're trying to capture that same space that crypto already has control over and say, oh yeah, we have a digital crypto or a digital form of the dollar, so why not just use our money? When it's really not the same, because the value doesn't change. Regardless if it's paper or digital, it's still the same. And, evidence that these governments are trying to do that is already there. Think about the U.S. economy and the national coin shortage, or, you have to have exact change when you go to Dunkin' Donuts and get a coffee. That's not because there's actually a coin shortage. We're trying to phase out the majority of people using paper money. And, why is, paper money just doesn't work. And the reason it doesn't work is because there's so many flaws to it as far as getting around certain things. You know, people can avoid taxes. People use it for drugs. I mean, a lot of people have those same arguments for Bitcoin, but the transactions...
It's a publicly verifiable blockchain. Every single transaction on Bitcoin, on Ethereum, on any of these networks can be verified. So if you send money from one wallet to another, and I don't think a lot of people realize this, when you send money from one wallet to another on Bitcoin, that transaction can be looked up, it can be verified, and you can see the exact time and the exact amount of that transaction from one wallet to the other. So people say, oh, criminals are using Bitcoin. That may be the case, but I guarantee you a whole lot more criminals are using cash because they don't want all their transactions publicly verifiable on a blockchain.
Definitely, 100%. There is no evidence other than, say, a fingerprint on paper money. You know, there is no evidence that money changed hands. There's no evidence that you have it. You know, there's no way to track that paper money and where it goes. I mean, yes, obviously everything leaves a paper trail to some degree, but, you know, it's very hard to keep track of. So
I think that's one of the most bogus arguments against Bitcoin is that criminals use it. I think having a publicly verifiable blockchain really serves a beneficial purpose for society because you can understand how money is being transacted and you can see where money is being transacted, and you're not relying on a middleman to confirm that transaction. You're relying on a decentralized network that's programmed by code that can't be changed. So people say, isn't Bitcoin not secure? Isn't it sketchy? How do I know that, you know, my Bitcoin is going to be safe when I send it to somebody else? That you're taking the trust away from the banks, away from the middlemen, and you're putting it into a decentralized network that cannot be influenced by any one specific entity.
Exactly. And basically with the US government and everyone trying to make digital versions of these fiat currencies, the reason they're doing that is not to help the people. It's to take the money back out of the crypto space and to be able to basically have a better watch over where their money's going. You know, so the IRS is going to have full control now if, you know, there is a blockchain basically of the US dollar. You know, there's going to be no more trying to evade taxes. That's not going to happen. You know, everything is going to be on a blockchain. Everything is going to be verifiable and be
Except
able to be...
they'll be in control of it. It'll be a centralized blockchain instead of a decentralized blockchain.
Exactly.
Governments can try to regulate Bitcoin. They can try to take down the exchanges. They can do whatever they want to try to stop it. But at the end of the day, if you have an internet connection and a VPN, you can access Bitcoin, you can transact Bitcoin, and it's totally decentralized autonomous network that cannot be stopped, it cannot be shut down, and it cannot be controlled. So I think there's power in that, and I think that as governments extend their reach, I think the best use case for Bitcoin will be if a government bans Bitcoin. Because that just shows you why you need decentralized money. That shows you why people need to have that control for themselves. Because when we give control of our money to the banks, which they have now, when we give control of our money to the Federal Reserve, they basically have everybody by the balls. They can artificially manipulate interest rates. They can artificially print more money. They can do whatever they want to make sure that they still have that power. And I think they're terrified that, you know, decentralized monies are starting to take some of that market share.
Yeah, not only the fact that it's decentralized, but the fact that Bitcoin itself is deflationary. You know, all currencies up until now have always been inflationary. You know, they lose their value over time because there's more and more produced. Once all of the Bitcoin is mined, that's it, you know. There isn't going to be any more. There's only going to be less and less as time goes on. You know, for example, somebody's holding Bitcoin in their account and they die and nobody knows the password. That's less of it that's available to the open market. You know, so its value over time is really just going to go up, and that's basically it.
It's a super simple equation, right? If you really think about it, more fiat money is being printed every single day, every single year, right? So more fiat money in the economy, less Bitcoin every single day, right? So you're having more fiat money being printed, and then you're having less Bitcoin available. By nature, that would increase the value of Bitcoin just mathematically, right? Just a supply and demand. There's only ever going to be 22 million Bitcoins created. Right now, I think the circulating supply is around 18 million. So there's only about 3 million or 4 million Bitcoin left to be mined. And like Victor said, that's not accounting for all the people who've lost their Bitcoin, who've lost access to it, who have accidentally sent it to the wrong address, who it's basically just floating around in the nether and it can't be accessed. So you have an extremely scarce resource, one that a lot of people want right now, as more money is being printed and thrown into circulation in the economy. I think it's a recipe for success for Bitcoin. Obviously, no one can predict the future, but I can say with pretty guaranteed confidence that Bitcoin will be worth more in the future.
Yeah, and I think Bitcoin's place in the future is definitely going to be as a store of value instead of a currency
Yeah.
because, Bitcoin, it is a good technology, but it is slow. So there
It
are
takes
a
about
lot.
45 minutes to an hour for people who don't know. Once you
Exactly.
send Bitcoin to somebody else, that has to be verified on the blockchain by the miners, right? So that's the miner's job, is every time a transaction goes through, they have to verify that transaction, and that takes about 45 minutes to an hour to go through. So look, no one's paying for their coffee in Bitcoin. I know when you talk to a lot of people about Bitcoin, they think that it's going to replace the US dollar, that it's going to replace currencies, that you're going to go and buy a pizza with Bitcoin. That's not going to happen. I think once more people start realizing, look, fiat is never going to go away. Bitcoin's not going to replace fiat, but I think Bitcoin will take a certain amount of market share away from gold or away from other stores of value because, like Victor said, it's a deflationary asset as all other currencies in the world are inflating. And once people start looking at Bitcoin as digital gold versus a way to buy my coffee, I think people are going to realize that it's a smarter investment.
Yeah, definitely. And basically going into that, there are a lot of other crypto projects out there that are faster that could be used as an actual currency, to buy or purchase a coffee, like you said. And even smart contracts, with Ethereum, that's a whole new market that we're really not familiar with as far as cutting out the middleman. So what are your thoughts on Ethereum?
Yeah, so I think Ethereum probably has one of the strongest use cases of any crypto out there simply because of its smart contract technology. And I'm not going to dive in too much to the technology. I'm not going to claim to be an expert developer or anything like that. But what I will say is that Ethereum allows people to make transactions via digital, decentralized smart contracts. You don't have to rely on a middleman to verify that transaction. And what's really cool about Ethereum is that it's powering all of these new technologies. So Ethereum is a network where you can build something called decentralized apps. Yeah, so I'm super bullish on Ethereum. And if you don't know what Ethereum is, it's the second largest cryptocurrency right behind Bitcoin. I think its market cap is sitting at about $180 billion right now. So there's still a lot of room between it and Bitcoin. But what Ethereum is, it's a network for smart contracts, which basically allows other technologies to be built onto its network. So other companies, other blockchains can be built onto Ethereum's network. And that's what you're seeing right now happening with DeFi, which is one of the coolest spaces, the newest spaces in crypto. And you're also seeing it with NFTs or otherwise digital collectibles, which are just blowing up right now. Both of those industries rely on Ethereum to exist. So let's just jump into DeFi, which is something that I've recently put a lot of exposure into with my own investments because I think it could be a huge thing, where DeFi is basically a way for you to store your digital assets into a protocol and then earn interest on those assets via the blockchain. So traditionally, if you have money, right, and you want to earn interest on that money, you would either privately find somebody to lend that money to for an interest rate, or you would give that money to an institution who lends it out and then you earn an interest rate on your money. So earning interest is one of the oldest ways of using your money to make more money, but you always have had to rely on some sort of centralized institution as a middleman. Now with decentralized finance, DeFi, which is built on Ethereum, you can actually lend your money out through decentralized protocols programmed by code, which lends your money out to new projects, to people who need crypto to basically start their new projects, and then you can earn massive interest rates on that money. So I think DeFi is kind of a gold rush right now. You're seeing a lot of scams happening in DeFi. You're seeing a lot of pump and dumps happening in DeFi. But I think as any new industry, right when it gets started, it's unregulated and there's a lot of speculation going on and there's a lot of, money grabs going on. But I think the concept of DeFi is sound. And just a few projects off the top of my head, you have Compound, you have Aave, which are two of the major lending platforms or lending protocols built on DeFi, where basically you can stake your money, you can stake your crypto into these platforms and then earn interest. So I think that concept is extremely valuable, where if people realize they don't need banks anymore to earn interest, they don't need to put their money into bonds, they don't need to put their money or lend their money out in traditional ways, you can actually invest that into a decentralized network and earn interest on it. So I think DeFi is really interesting for anybody out there listening. I think you should definitely take a look into DeFi, do your own research. But I think over the next 5 to 10 years, we're going to start seeing some big players, some big names start getting into DeFi when they realize that the interest rates they can earn on their crypto is much higher and they don't have to rely on a middleman. And then just to jump into NFTs as well, which is another way that Ethereum becomes more valuable. And you have Gary Vee talking about it, right? You have Logan Paul talking about it. You have a bunch of these influencers talking about NFTs. What NFTs are basically digital collectibles. So you have something which is called a non-fungible token, which means that it cannot be replicated and it cannot be recreated. So if you have a piece of digital art backed by an NFT, you know that that piece of art is authentic. And it sounds crazy, it sounds ridiculous. I know it's hard for me to wrap my head around it. I know me and Victor were talking about this the other day, and he's like, wait, can't you just screenshot that piece of art and then call it your own?
Yeah, but it has its own code to it.
Right, it has its own code. So you can replicate a Picasso, right? You can have a Picasso replica hanging in your house, but guess what? It's not the real Picasso, so it doesn't have the same value. So that's where digital collectibles are really interesting. And what I've seen a few really promising companies doing some stuff, like NBA is actually getting into this space with something called NBA Top Shots, where you can actually own, verifiable on the blockchain, licensed by the NBA, you can own a digital clip of a basketball event that's happened, and that's your clip forever. You own that clip on the blockchain, it's authentic, and you can then resell that at a later date. So let's just say if you're a Heat fan, right? When Ray Allen hit that three that sent them, to the next round in the finals, and it was like one of the major pillars of the Heat winning the championship that year when Ray Allen hit that shot. You can own that clip of Ray Allen hitting that shot, licensed by the NBA officially on the Ethereum blockchain through a non-fungible token. And like a basketball card, that's just going to increase in value over time. So you're seeing this gold rush into NFTs. You're seeing this gold rush into DeFi. And like I said, I think a lot of it is going to pump and dump. I think a lot of it's going to scam and get rug pulled. But there's going to be a few key projects in these spaces that stick for the long term and make a lot of people a lot of money. So I think Ethereum, I'm super bullish on Ethereum. I think there's a lot of really cool projects in blockchain that I'm not even going to claim to be an expert on because I'm not a developer, I'm not an expert in code. But I do listen to people who are much smarter than me, and I see a lot of money being invested into this space right now, so that definitely has my attention.
Yeah, definitely. And since we're on the topic of Ethereum, what are your thoughts on Chainlink?
Yeah, Chainlink is an awesome project. We've seen it explode in value over the past year, and I'm still kicking myself in the leg for staring at Chainlink at like $7.
Yeah, I think it was like 60 cents sometime last year.
Yeah, literally it went from about 60 cents to its peak at $36, and I literally watched it go from about $1 in value when it first came on my radar and explode all the way up to $7, and I was like, I'm not going to buy this after an 800% return, I'm not going to buy this after it almost 10x'd. It has to be running out of steam. And then it continued to go from $8 to $10 to $15 to $20, $30, $36. So I'm still kind of kicking myself in the leg over not getting into Chainlink because I didn't do my due diligence and I didn't research it. But basically Chainlink is one of those technologies in blockchain that connects Ethereum and other blockchains together, hence the name Chainlink. It allows them to communicate. So that's something that has a really strong use case, really strong technology, and good props to anybody who got into Chainlink early.
Yeah, and that's one thing you really got to look at when you're investing in any kind of new technology or any kind of cryptocurrency is you see a lot of people out here that are just investing in basically dumb shit.
Pump and dumps,
Doge, perfect example. It's literally a meme. It's a picture of a dog. It has no value to it whatsoever. And you got massive amounts of retail investors, specifically young new investors that really have no experience in any financial markets, basically just throwing all their money at something in hopes that they're going to become a millionaire or make hundreds of thousands of dollars off of this meme coin that literally means nothing. So while there is very good projects out there, there is even more bullshit out there. So there is a lot of pump and dumps. There's a lot of just garbage in the crypto space that you have to filter through. But another one of the, very interesting technologies is something called XRP that Ripple is actually in charge of. So if you're not familiar with Ripple and XRP, XRP is basically a cryptocurrency that is used for cross-border payments. So the easiest way to explain it is for anybody to move, any amount of money from, say, the US to Japan, right? The quickest way for them to do that is to drive to the bank, withdraw the money, get on a plane, and fly to Japan, and then put it in the bank. Wire transfers take 3 to 5 days. We're in 2021. Money should move just as fast as the internet. There's no reason that, somebody could type a number in your bank account and you have more money. And it's as instant as that. The Federal Reserve can just type up a new number and boom, there's more money in circulation. They don't even have to print it anymore. It's printed digitally. Why do we have to spend $28 on a wire transfer and wait 3 to 5 days for our money to go to a different country when at the same time, I can make a long distance phone call and talk to that person right now? So we're moving into a space where money is supposed to be moving as fast as information. And basically the way XRP works is, your domestic bank would take your money, transfer it into XRP, move it across the XRP network, now called on-demand liquidity. And basically at the other end of that transaction, the bank in Japan, for example, would withdraw that XRP and turn it into their native currency, the Japanese yen. So it really is interesting at the point where Ripple is right now. Ripple is the company that actually actively manages the XRP. No, they did not create XRP, but they are owners of it. So they have a lot in escrow, and if you guys aren't familiar with them, they are in the middle of a lawsuit with the SEC. So really, I believe that price is being suppressed because of how good that technology is. The lawsuit is really what's keeping it from exploding right now. So if you guys haven't heard of XRP, definitely look into it. There is a ton of information on it. There is a huge use case for it. But like I said, until this SEC lawsuit, really comes to an end or they settle or anything like that, I don't really see any upwards price movement just because of how much uncertainty there is of whether or not Ripple was selling XRP as an unlicensed security back in 2013.
Yeah, and I think we're at odds a little bit over our views on XRP. I think the use case for XRP is strong. I think that value in being able to instantly transfer money overseas for a very low transaction rate is extremely valuable. What I don't like about XRP is that Ripple is a centralized company, and now they're in hot water with the SEC because they were doing some shady stuff, and that just goes to show you when you have somebody who is centralized, who has manipulation over the currency or over the asset, then you're basically relying on them to do the right things. And so I think the use case is strong, but I don't know if XRP or if Ripple is going to be the one who actually captures that market share, right? So what's stopping JP Morgan or Chase or whatever from creating their own coins? Or what's stopping these banks from using a stable coin like USD Tether or USD Coin? Because those coins are instantly transactable for very low fees and they're tethered to the price of the US dollar, whereas XRP is very volatile. So if they send, if you send $10 million worth of XRP, by the time it gets to its destination, that could be worth $8.7 million because it's extremely volatile, or it could be worth $12 million. So I think stable coins might take more of that market share. I think XRP has a really strong use case, but I don't know if Ripple is going to be the one who actually captivates that market share. I guess that's just something we'll have to wait and see.
Yeah, definitely. It's really important that whatever does capture that market share is really decentralized. And, if that entity goes down, Ripple, what does that mean for XRP? Because they control so much of it.
Right.
So, it's really important that there is no central location or central company that controls, something that is managing basically the liquidity across the world, because
then politics comes into play, relationships comes into play. Any time one entity, one person, one company can control an asset with the click of a button, I get a little bit nervous about that, which is why I'm super bullish on Bitcoin. I'm super bullish on Ethereum because these are totally decentralized networks. They cannot be tampered with. They cannot be changed. They cannot be influenced by any outside party other than governments regulating the exchanges, right? That's pretty much the main way that the government can put its hand in crypto. And I think that's probably the strongest argument against crypto, right? Is that, look, if crypto starts taking a lot of the market share and a lot of the power away from governments, what's stopping a government from, all right, we can't stop crypto, but we can ban all the exchanges. We can put heavy regulations on how you can buy and sell crypto. We could take away the ability to use leverage and to use margin, which we've already seen happen in the US. So I think there's going to be a bit of a battle between governments and between decentralized blockchain technologies. But what I think is going to happen in the long run is that companies, huge companies with a lot of influence, are going to start dipping their toes into crypto as an investment. And once those companies rely on crypto, once those companies are extremely invested in crypto, they're going to use their power to make sure that the government doesn't overregulate it. So I think that's what happens with a lot of industries.
Yeah, definitely. And basically to touch on that is the governments could either block it all out and, basically like Blockbuster did and didn't adapt, or they could take advantage of it, allow everybody to continue trading cryptocurrencies and place a tax on capital gains, that's separate from every other, like every other capital gains tax, because while it is a capital gain, it's probably the highest capital gain that anybody's ever seen on their
Why would the government tax filing want their piece of the pie?
Exactly. So, you're talking about hundreds of percent gains versus, what you typically see in, a stock market, like somebody's portfolio over a year may grow 20%, 30%, even 100%, whereas somebody in crypto may have a portfolio that grows 10 to 15,000%.
Yeah. Yeah, I want to just tie this into the next point, which we were talking about trading a little bit versus just holding and investing. I think this is where a lot of people maybe, when they're getting into crypto, they don't know what to do. They don't know how the best way to profit off of crypto is. Maybe they start trying to day trade it. Maybe people just buy and hold. Maybe people are swing trading. So I think there's a lot of different ways people approach crypto. And I think new investors, the hardest thing for them to do is get over the emotions of watching the price every single day. Crypto is an extremely, extremely volatile industry. And if you're not comfortable sitting in a 20%, and sitting in a 20% loss for a little while, or sitting 20% unrealized, net loss, then maybe crypto isn't for you, because it's extremely volatile, but it's extremely lucrative. And I think that if the majority of people who got into crypto, instead of trying to trade it, instead of trying to flip it, you just picked projects that were legitimate, have use cases, and are going to increase in value over the future. If you just cost average, buy and hold, and look at it as a long-term investment, I think the majority of people will win that way. Because I think a lot of people get trapped into, like what we've seen with Dogecoin and like what we've seen with GameStop stock, is they want that quick flip, right? They want that
instant gratification.
Yeah, they want to turn $1,000 into $100,000. But what happens when you're thinking about it like that is, well, what happens if it goes down 20%? What happens if it goes down 30% in a week?
Yeah, most people are over leveraged.
You're going to get scared. Maybe you're over leveraged. Maybe, you thought that you were going to be driving a Lambo next year, and now you're down 30% on your initial investment. So if you don't believe in the projects you're investing in, if you haven't done the research, then maybe you shouldn't be investing into crypto at all, because it is extremely volatile and it's extremely risky. I just think that a lot of people don't understand that, right? I think a lot of people look at risk as a bad thing. I think if you come into crypto with the knowledge and with the perspective that it is risky, that you might lose your money, or that you might sit in a downtrend for 2 to 3 years, but you're okay with that, I think that's what's going to lead to a winning mentality with crypto, because you're going to sit through all the noise. You're going to sit through all the FUD. You're going to sit there and you're going to hold. You're going to have those diamond hands, right? And in the long term, you're going to win. So I think if you're looking to get into crypto, I think if you don't know much about crypto, the first thing you should do is listen to people who are a whole lot smarter than us, right? Because there's a lot of information out there. 2, the second thing you should do is you should look for long-term investments. It's really hard to try to flip. It's going to be really hard if you're looking for the next pump and dump, right? If you're looking for the next Bitcoin, the next thing that's going to go from 5 cents to $1,000, I think you're pretty much guaranteed to lose if you're looking for stuff like that.
Yeah, definitely. While it is good to buy and hold, crypto over a long-term period of time, because obviously crypto is a very long-term investment. It's still pretty new. Bitcoin itself is just over 10 years old. It's not really it hasn't really been around for long enough to have identified its total value. So while you should buy and hold, there are specific times where you need to make those purchases, and there are specific times where you can sell to buy in at a lower date, So I don't really recommend trying to scalp crypto, because of how volatile it is, but it does follow some sort of technical price action. So you can really take advantage of the optimal points to purchase Bitcoin or purchase any other cryptocurrency. There's no reason for somebody to buy it, after we've gone parabolic and have gone up 6, 7, 800%. There's no reason to make a purchase at that point. You can wait for a retracement, wait for an optimal, demand level or supply level rather, to then, place your buy order. Take a buy, get the most for your money.
Yeah.
If you miss out, that's fine. If you miss out on like a huge run, that's fine. Don't buy the top. Wait for the price to come back down. Wait for consolidation. Wait for that domino effect of margin calls, because so many people are over leveraged on crypto. They buy it, they're way in over their heads, and then you have a crypto whale basically dump their share on the rest, and it creates a domino effect. As price continues to go down, more and more people's over leveraged positions get liquidated, and they're forced to sell to close the position. And now you have this big drop in price. And it happens time and time again. It happens on every single time frame. You see it on the hourly, you see it on the 4 hour, you see it on the daily, you see it on the weekly, even the monthly. In 2017, we shot down almost 50% in I think a week.
Yeah, real quick.
So
I don't want to make it like you can't make money trading crypto. I think probably successful traders make more money trading crypto than any other asset because of its volatility. But you have to realize that if you're playing that game, you're playing a very risky game. All I was saying is, as a new investor, what you should be focusing on is cost averaging on projects that you believe in, that you've done research in. So if you're really bullish on Bitcoin, what you can do is, all right, let's just say you have $10,000. And this is my number one piece of advice for anybody getting into any type of investment. If you have $10,000 that you want to invest, that you're okay with investing, that you're willing to lose that money, right? Instead of putting all of that $10,000 into the market at once, what you should do is you should maybe put $1,500 in the market and then wait to see what price does, and then put another $1,500 in, and then put another $1,500 in, because the worst thing that you can do as an investor, and this is where I learned my lesson in 2017, is I put all of my money into the market and then everything dumped. And then when everything dumped, that was a great buying opportunity, but I had spent all of my money buying at the top instead of cost averaging down. So what I could have done, right, is when the first time I bought Bitcoin at like $14,000, after it dumped from 20 to 14, I was like, oh, this is a good spot to buy. So all the money I had in my bank account, I bought Bitcoin, right? And then it went down and I was like, shit, I can't buy any more Bitcoin now because I just used all of my money that I had to buy it at the previous level. So I think if you're a new investor, the number one thing that you can do is just cost average down and look for opportunities. Be patient, wait for the right opportunity, look at price action, and then if you want to make a purchase, just use some of your capital, right? And then make sure you always have some dry powder and look for those opportunities when they present themselves.
Exactly. You never want to just take your full amount of capital and take one entry and that's it. It's really good. It's really important that you scale in over time as price moves down, after you encounter a support, make a higher low or something like that. Because at the end of the day, say you invested 10% of your capital and price kept moving up. Okay, you made whatever percentage of money on that 10% that you invested. But if you invest all of your capital and price continues down, now you have a higher buy-in price and you're sitting in drawdown. Your money's worth less than it was. Whether, for example, on Litecoin's $165 right now. After its peak at 240 or whatever it was, when price started coming down, I identified a key support level and I put in buy positions. I was entering 10 to 20% at a time as price was moving down, towards supports. And obviously as price moved down, I had bigger and bigger entries because it was cheaper. like price is cheaper. It's $165 now. It's 30% off of its high. Yes, I'm going to buy more than I did when it hit 200, because at $200, there is on higher time frames still way more room for price to move down to its previous support on higher time frames. Whereas, we're at 165 now, 150 level, there's a weekly support there. So yes, I'm going to have a bigger entry there. It's good that you have bigger entries on higher time frame supports, because the likeliness of price basically breaking those levels and continuing down are just highly unlikely, especially if you look at the average length of a bull market in crypto. So every crypto bull market is typically a little bit less or a little bit over a year. And this one, I think we're only like 3 or 4 months into the bull market. So, it's still very early, even though you're seeing these huge price swings. That's something that's very, very normal in crypto. And you see that time and time again, every single bull run. There is going to be 20, 30% pullbacks.
Yeah, I think the key word here is patience, right? And just to put things into perspective, I was that guy who got into crypto right as everything dumped in 2017. My first ever Bitcoin entry price was $14,000. My first ever Ethereum entry price was at $800. I saved up my money. I was working at GNC at the time, making, just over minimum wage. I saved up my money. I bought a full Ethereum at $800 because it had dropped from $1,300. And here I was thinking I was a genius buying the dip. And then it just kept going down. But to put it in perspective, I didn't capitulate. I did not sell my position. I was confident in my long-term analysis of crypto. And now that $800 Ethereum purchase is sitting at around a 300% gain. It just took time to get to that point. I had conviction in my analysis, and I was down on that. I was down like 75%, 80%.
I was there too.
And now that Ethereum that I bought back in 2017 is almost 300% in profits. So I think the key word is patience and cost averaging. I think if you have some money to deploy in the markets, be really smart about how you deploy that money. Don't just rush all into the hype. Never FOMO into the hype, right? Because right when the FOMO is at its highest is usually when we're reaching a local top. So I think if you have 10 grand, like I said, be really smart with your money. Put in $1,000, put in $1,500, wait to see what happens. If a new opportunity presents itself, put in another $2,000. If a new opportunity presents itself, put in another $2,000. And eventually, over time, you'll end up with really good entry prices. So I think that's really important when you're getting into crypto, when you're getting into investing, is just to have extreme patience.
All right, so we definitely just went over a lot. I think there's a lot of valuable information in this podcast for those of you who've listened to it.
Maybe a little too noisy, right?
Yeah,
a lot of stuff.
we talked about.
We should
briefly
dive deeper into more specific topics in future podcasts.
Yeah, definitely. We talked briefly just about over a lot of key points in the crypto market, but I think this just about wraps it up. Thanks for coming. Thanks for being on the podcast. Really appreciate it.
Thanks for having me here.
Yeah, it's been a really, really good discussion. So I look forward to having you back on here.
Yeah, for sure. I can't wait.
All right, guys. Thanks for tuning into the Bandit FX Podcast. This has been episode 2, All Things Crypto with Jake. I'm going to leave all of his social media information in the comments in case you guys want to find out a little bit more about him and what he does. Again, thanks. Leave a like, leave a comment. Let me know what your thoughts were and any other topics you would like me to cover. Any special guests you'd like me to have on here, let me know. And don't forget to subscribe. See you guys.